what's going on, everybody? Hope everybody is doing well, having a good weekend. Oh, we got a little background music playing. Stand by. There we go. Hope everybody's doing well, having a good weekend. In the U.S., we got Memorial Day weekend, so extended weekend before we can get ready to start up trading in the market. Hey, look, this was one of those weeks we asked for. We wanted a big pullback, and we got it. The question now is this going to turn into a pause that leads to a bigger bull run, or is this kind of over and are we headed downward? So, all right, let's jump into it and see what we're looking at. All right. So right now, I do want to say for some reason my Twitter feed is not giving a actual live stream chat. Having some issues on my Twitter feed. So, but you could jump over to YouTube if you're watching there. I can see that chat. You can share it over there. All right, getting started. Current trend of the market. We are in an uptrend. The power trend is still active. So even though we had the pullback, we were able to keep the power trend going, which is positive. We did gain a ton of distribution, 2 on each index, 2 on the S&P, 2 on the NASDAQ. And looking at those, you can see that was Tuesday and Wednesday on the S&P, and Wednesday and Friday, yesterday, on the NASDAQ. So 2 distribution days added on each, not the biggest deal, just something to be conscious of. Would have probably rather that pullback be a little lighter volume, kind of not giving us those distribution days. But there's a couple things we'll look at. We look at the indexes, talking about volume, talking about that pullback. In terms of the week, what we saw, the S&P was down 2.61%. The NASDAQ down 2.47%, and Dow also down 2.47%. The big thing, though, was we were positive on the S&P, positive on the Dow, and very, very, very close to positive on the NASDAQ. However, you can see we are now completely red on everything, back to in the red in the indexes for the year. Looking at the moving averages, so same as last week, we're green on, all of these indexes. The big thing, breaking below the 10-day simple moving average, not a big deal. We'll look at that again when we look at the indexes, but just something to take note of as we kind of started to pull back. The Dow did drop below the 21, or really at the 21. So we'll see if we can find support there and break above, or if it'll break down lower. But mainly, we're looking at the S&P and we're looking at the NASDAQ. All right, so let's jump over to TradingView. And we'll look at the indexes. All right, so on the indexes, we'll start off on the NASDAQ. Monday was that big day we were all talking about last weekend, the Moody's downgrade, or Moody's downgrade, and everybody was kind of concerned. The futures were down. Things did not look good going into Monday, but as you can see, we were able to rally and grab ourselves just a slight up day of 0.02%, just squeaking out. So hitting that resistance area right around here that we were kind of talking about last week, where it seemed like we were tightening up right around here, still had that right there. We then kind of pulled back. We broke below that 10-day simple moving average, but the key levels that we were talking about, the 21 and the 200, we were able to hold above that. So super positive to see that. You can see the 21, because of how long we've been trending up, is looking to now make that cross above the 200. But all in all, look, this was something we had been asking for. We had gone up so quickly. We talked about a real true pullback, and now we're starting to kind of get that pullback. It's giving you the opportunity to hopefully get into some stocks that have run up like skyscrapers, and maybe give us some alternate entries, or some just lower risk entry points. So positive action. Obviously, the market going up is always something you want to see, but that's just not how it works. On the upside, really what I'm watching an eye on is that May 19th high right here. It's really that general area is where we're seeing a ton of resistance, ton of tightness even before we broke down. So breaking above that will be a real positive sign for me. What I'm looking at on the upside. On the downside, it's really 2 main levels, but you can also throw in a third there. Looking at the low on Monday the 12th, would like to stay above that low of the gap up. And then moving average wise, it's the 200 and the 21. 200 being the big moving average that pretty much everybody looks at, a lot of the algorithms look at. The 21 being one of those moving averages that I think a lot of position and swing traders really, really focus on. So they're converging. If we can find support or at least maintain above or at least find support at those levels, that'd be very positive for the overall trend. But like we had talked about before, we're still in a power trend. It hasn't turned off. The criteria was met. That tells us this is a different type of market or a different type of point in the market trend. So needless to say, I don't see anything super concerning, but I'm also just kind of being patient. We'll look at the weekly, and this is where I was talking about looking at the volume. So though we did have that distribution days on two of them coming in on both indexes, if you actually look at the weekly volume, you have 1, 2, 3 weeks with the NASDAQ, and the three, you would say, kind of pullbacks in this uptrend. The volume is lighter than that. So something to take note of. This big week right here, volume wasn't so great, but three are pretty strong and above all the 3 down weeks. So overall, looking at the bigger picture and the bigger trend, seems like that volume's coming in. We'll jump over real quick and just kind of look at the S&P just to take a look. On the S&P side of things, yeah, you can see same kind of pullback. We did kind of intraday break below 200, but still found support there, which is all positive. So most of that stuff's really looking the same. In terms of the high, we're looking at that Monday the 19th, that high there, breaking above there, and continue to find support at 200 and stay above these levels. Basically, to make it simple, what we're trying to do is create higher lows. We know the market isn't going to go up in a skyrocket. We know we're going to pull back as we climb higher. And as long as we are creating those higher lows and finding some support at some of those key levels, then everything is basically operating as expected as we climb higher. Too often, I think people, the news, market action, day by day, they get so hyper-focused on what's going on and everybody's doom and gloom. And sometimes it's just important to understand this is how the market works. It does not go up like a rocket. There is an up and down to it. And a lot of this action is just kind of general, normal, what we'd expect type of action. Real quick, looking at the weekly though, really clear here in the last, let's say, we'll start from the rally week. You have 4 up weeks, 3 down weeks, 3 down weeks clearly on lighter volume as we pulled back on those 3 weeks, or if you even want to call the first 2 really a pullback. But yeah, so it's clear we're seeing that volume coming in on the upside and volume lightening up on the downside. Definitely a positive sign for the overall trend. All right, let's jump over to deep view and let's take a look at what's going on within the industry groups. On the industry group side of things, this week we saw miners kind of pop back up in the top right there, and that's been that kind of real popular defensive play that we've been seeing. But we've also seen blockchain, growth stocks, biotech, some of those groups that I think a lot of us have been watching, with the whole Bitcoin hitting all-time highs. Obviously, growth stocks is what most of us tend to look at, and that biotech industry has definitely been a hot industry to be talked about. So, yeah, nothing really crazy to look at here. And then in the last month, we're really seeing just more of the type of stocks that we and people who trade using CANSLIM, people trade like Minervini, those big growth names, the next true market leaders. We are seeing those become higher up in the rankings. Like I said, we talked about blockchain, but you also got semiconductors in there, technology, solar, software. You're starting to see those populate, which is a positive sign as the market started to turn around. But on the year to date, yeah, look, overall, we're still seeing a lot of those defensive plays, but we are starting to see some of the growth stocks and industries like that pushing into the industry group trends. So positive sign. Overall, it does take some time for that turnaround of switching from defensive plays to more growth stocks to really populate in these lists, which is why I try to look at things on a weekly, monthly, and a year-to-date time frame, because it gives you a little bit of perspective as things are shifting, where if you see things basically remaining the same through all 3, you know that trend's kind of starting to continue. So what we're looking at here looks like a shift, which is positive. All right, so talking about exposure levels, because I think that's one of the things that I like to really, really focus on. Being a foundational CANSLIM trader, I like to look at the overall market. I like to look what's happening and dictate a lot of my exposure to the market based on what I'm seeing in the overall market trend, as well as what I'm seeing in my watch list and in my portfolio. And with that being said, I still think it's fine in that, almost fully invested type of exposure. 80, 100%, completely fine with that. I don't think this is the margin point yet. It's just this could easily turn around. I don't think we're at a point to be on margin. And if I was for some reason on margin right now, I personally would be pulling it off or would have probably pulled it off once we met that resistance. But if you've got positions, you've built cushions, if your stocks are acting healthy and according, like we said, same way the market's going to go, not going to go up in one straight line. Neither are stocks. Stocks are going to create pullbacks. Stocks are going to come down to sometimes certain key levels, hopefully find support, and then continue that stair step higher. Yeah, so I think that's important to think about. Same thing we talked about the market. Don't look at a down day and have it get those emotions riled up and say, oh man, my stock's down 1%, 2%, 3% a day, whatever it may be. Look at the chart. Look at what's going on. Is this normal, expected action in a pullback? Especially seeing those lighter volume pullbacks at some key levels, those could just be offering another opportunity for some low risk entries. Biggest thing though is nobody knows what's going to happen in the market. Despite what some people may say, nobody knows. Could we be up next week, down next week? Could we be flat for who knows how long? And the thing that you have to do on your end of it is to have a plan for all directions. Have a way to know, okay, if the market does this, I do this. If my stock does this, I do this. And that both on the upside and the downside. You do not want to be caught flat footed, whether it be with a stop loss, with a stock that just blows through some stop loss, and now you are in a position where you are making a quick decision because you're down on a stock. You also don't want to be caught flat-footed if a stock that you've been watching and a stock that you've been interested in blasts through a buy point, and now all of a sudden it's way past your buy point, and you're sitting in that situation wishing that you had had a plan and were prepared to make that trade. So very, very important to make sure we got a plan on both sides. And like I said, sometimes the market's sideways, and knowing how you're going to manage your portfolio and manage your positions in that. So final thoughts, my final thoughts for what's going on. Look, market is closed on Monday. That gives us a whole nother day essentially for the weekend. It gives us a lot of extra time. And look, you want to treat your trading like a business. And if you got some extra time with your business, you got to use that time if you really want to be successful. So catch up on anything maybe on the documentation side that you haven't had a chance to get and take care of. Look over some of your past trades. Look over what's been going on in your portfolio, maybe since you did your Q1 performance review, and see how things have some of the decision making that you've done. You may catch something that you're doing and be able to prevent it from happening moving forward. So good point when you get that extra time to really take a breath, take a look at what's going on in your trading, in your portfolio, and in the market, and do some extra work. Great time with the extra day to do a little extra studying, pick up a book that maybe you've read a bunch of times and just brush up on some things, watch a couple podcasts, stuff like this. And just take that extra time if you have it. I know everybody has other lives too, but without having to do your actual routine, maybe when you would be doing your weekend routine or your daily routine, use that time to help yourself and run your portfolio like a business. But most important, it's the weekend, so screen, prepare, really make sure you are ready for next week and whatever may happen Tuesday, because the fact of the matter is nobody really truly knows. But as we sit now with the information that the market has given us, I don't see anything very concerning about the market. I am comfortable with the positions that I have and comfortable being for myself. I got stopped out of one position, so I'm about 80, I think I'm about 85% invested. I'll be doing a double check on that to see my exposure level, but I was 100% invested. I got stopped out of HIMS, which I think a lot of people did. And yeah, now I'm comfortable with my exposure level, comfortable with my portfolio, and getting ready to prepare for what could be another bounce and an opportunity to add to some positions and to open up some new positions. So That's all we got for this week. I appreciate everybody taking the time, sitting down. I do apologize for anybody that's on X. Not sure what you guys are seeing, but for some reason on my phone, on my computer, no matter where I look up my X account, it seems like my feed's not loading. I wasn't really able to see the chat in here. It looks like I'm live streaming. I hope I'm live streaming to you guys. I can't even ask you guys to answer because it's not showing. So. I'm not sure if it's an issue. I'm assuming it's not an issue on my end because it's kind of happening on all internet connections, all platforms, things like that that I'm looking at. But yeah, I'll repost this on both YouTube and X so you guys can watch if you didn't catch the whole thing or if maybe the stream is coming through a little choppy for whatever it may be. All right. Well, everybody enjoy your weekend. Everybody in the U.S., just remember what Labor Day, sorry, remember what day it is. Remember what Memorial Day is all about, and the people that have gave their lives for our freedoms in our country. All right.